So we had the highlight of the day. It was the Bank of England monetary policy, who, as it was expected, didn't actually change anything in regards to the rates, at least. So what it was expected from the Bank of England is pretty much uh, to um, to announce any changes on the current policy in regards to the quantitative easing package, the relief package, and so on and so forth. But from rate perspective, nothing really changed, and that was universally expected. They left policy unchanged. Voting was pretty much as it was expected, 8-0. No one from the parliament members actually voted for a change in the policy. Another thing that was also as it was expected. However, something that it missed expectations. It was the voting of 7-1, so one member of the parliament, and more precisely, if I'm not mistaken, was Sanders. Vote actually to maintain the prevailing quantitative easing totals. Even though, once again, this is not a big surprise either, because Sanders is actually in the past he has descended that the quantitative easing vote. His quantitative easing vote would be in the favor of tapering, and this is what we actually have seen from the quantitative easing totals voting. So, as I said, BoE are now no changes in BoE. Gilts purchases reached to 875 billion sterlings. This is what this is clearly the aftermath of gilts pressure as Bank of England lays out a tightening path. We have seen the yield curve, actually the UK curve, between the 2 and the 5 and 10-year yields actually shifting higher. So okay, so the higher the curve is, the higher the curve shifts. As you can see, actually, let me share my screen with you so you can follow me in regards to the market's response. By the way, guys, you can add any questions that you have. Of course, we're gonna cover the pound crosses first. Of all, will be of course cable as Avijit requested. We are located in Cyprus, dear Dakal. Okay, but there are a lot of educational offices all over the world, so you can you can tell us where you're placed, and we're gonna advise whether we are hosting an educational center over there, so you can come in contact with our representatives. So let me share my screen quickly. Yes, dollar yen it is. Just so, but let's see first of all. I'd like to show you guilds firstly, because and this is the 30 minutes chart, as you can see. Okay. No, you can't. Okay. Give me a second to share both screens. Here we are. Remove caption. Excellent. So here's the UK gilt. So we had a big tail to the downside on the announcement of Bank of England's unchanged policy and unchanged quantitative easing. Quickly turned back to close to the open territory. So as we have seen, the gilt actually pressured on the announcement that actually Bank of England is laying out tightening path. That's why we've seen UK curve shifting higher. there is a correlation. I keep saying that you need to have in mind some basic theoretical stuff in regards to yields, curve steepening, or curve narrowing, and their correlation with equity markets. So they have an inverse correlation. That's why, by being aware how the treasury market reacted, we are actually aware of how the equity market, the stocks of that particular country will could probably react. So as we could see, we have some a continuation of this pressure in the second candle, in the second 30 minutes candle, in the follow-up candle, because even though there wasn't any change at all, the voting, the 7 to 1. So the fact that we had at least one person of the parliament, or the member of the monetary policy committee, more precisely, um, being against the maintenance of the quantitative easing totals is something that um, uh, that suggests that in the near future we might see more monetary policy members actually shifting to that direction, especially as UK and the economic data that we are getting, they are not really slowing down. They keep providing some positive vibes in regards to the recovery of UK economy from a year ago levels. So yeah, so that's why we've seen a bit of a pressure. 129.95 quickly turn back, but keep shifting lower as we're moving towards the end of the top of the hour. Okay, so let me check whether there are any significant comments so far. Yeah, of course there are. So in the statement, maybe something that we're gonna see Mr. Bailey repeating. So in less than 15 minutes, we have Mr. Bailey speaking. That's why you need to be a bit careful, because this might cause a lot of volatility, especially if he comments or he states anything uh, that is sounded like hawkish, more hawkish than what is expected, or more dovish than what is expected. Any extreme behavior, any extreme comment from him could add further volatility to the market. Because for the time being, because we are ahead of Mr. Ballet's speech, we don't have a lot of volatility in the market. But let me shift to cable, by the way. Um, Sorry. So we, of course, we have volatility, but I mean, it's expected to increase even further during Mr. Ballet's comments. So you need to be a bit careful with any decision that you take, maybe waiting for the market to calm down a bit, because we still have the statement, even though he might probably repeat whatever is included in the statement that it was already published earlier. So where Bank of England stands, still insist that there are a lot of um, global transitory pressures which should prove to be transitory, something that it was repeated by other central banks like Bank of Japan recently, if I'm not mistaken. So repeated this transitory inflation pressure. Also, it sounded a bit more hawkish than before, because they clearly stated that they could hike the rates in the future, they could increase the rates in the future, but that will be done before reducing any purchased assets under the quantitative easing program. So, in contrast with other countries, such as Canada, for example, who started the tightening path from reducing the amount of relief programs that they provide, in contrast with Bank of Canada and other countries as well, they are the ones that they clearly stated that they will hike rates first and then consider to detect the quantitative easing measures. And these quantitative easing measures will be detected, as they stated, uh, only if the rate is at 0.50%. Okay. Currently is at 0.10%, so we have around another 0.40% increase until they reach 0.50%. So yeah, signaling from the one hand the tightening path, the high rates, the hawkish stance in the future, but on the other hand, they clearly stated that as long as we don't actually, um they don't actually. Um, they don't see actually and enough programs in order to avoid these transitory inflation pressures, they won't do anything um, different than what they are doing right now. So, pound, you can see all this volatility over here. The pound spiked initially. I will put the 15 minutes chart so you can clearly see it, or even the 5 minutes chart. So, tumbled down to 139, retesting the round 139 level, but quickly spiked higher to. Can you see my screen? Yes, you can. Perfect. Let me keep an eye on your chart. So quickly spiked higher after retesting the round 139 level and bounced to 139.45. So 45 pips bounce after retesting the round psychological 139 level. This quick reverse that we are seeing. Can you see? This is 5 minutes chart, by the way, guys. Okay. This quick shift lower again. Uh, it was on the. It was just the volatility that I'm telling you about during the announcement. Um, so they, even though as you can see, quickly turned back um, to where it was settled for the last two, actually for the day. So it quickly turned back to the 139.20 area, which was an area sustained, a level that was sustained prior the announcement. So let me get back to the 30 minutes chart. We had seen a rebound since the beginning of the day, boosted higher, consolidating ahead of the announcement, and we have a big indecision candle on the announcement with long tails below and long tails at the back. So nothing is really clear in the intraday basis, okay? Because the asset remains below the round, actually above the 139 level, but also in the flip side, it remains below yesterday's peak. So what we have pretty much seen since for the whole week is pretty much a consolidation between 139 and 139.50. So that is not a clear outlook intraday, especially ahead of Mr. Ballet. But what is clear, not clear actually, what we can see, what we can derive from a technical perspective is that it had a strong bounce for the last 6 hours. Okay, fast moving averages are keep pointing higher, even though we have some small body candles over here, but they keep pointing out upwards. RSI is above 50, and if I quickly shift to my short-term um, shortened time frame. Okay, I would like to add the my short-term stochastics as well. Perfect. and my MACD as well, even though I use them in a long term and not in the medium term, not so much in the 1 hour chart. But okay, so even though fast MAs keep pointing upwards, RSI above 59, however, stochastic, the fast stochastic, as you can see over here, implies that this bounce might run out of steam and it already barely crossed and moving below 80. So we might need a pullback over here. We might see a pullback. Yeah, but nothing is clear yet. We need to wait for Mr. Bali to finish. So in the long term, I will get back to the pound as soon as Mr. Bali finishes. But in the long term, as you can see, um, pound turned higher for the whole July and so far August, sustaining a nice floor over here above the 139. Okay, well above its 20-day moving average, well above its 200 moving average. So it sustains a positive to neutral outlook. What I mean, it is sustaining a move. Actually, we have seen a rally, but for 1, 2, 3, 4, 5, 6 days in a row, it's consolidated. So, what is key? The outlook of pound actually is positive from fundamental perspective, from technical perspective, but in order to confirm a switch to the further to the upside, I mean a further boost to the upside, potentially to the top of 2021 back to 142 level, we need to see this top, this these double up fractals breaking. So we need to see a break of the 139 80 level in order to turn the attention to 142.60 highs, which are the highs of 2021 for the time being. Okay, so positive overall outlook, as I already said, but we still need to see a breakout of this level, okay, to the upside, of course. So, I can see that a lot of you are asking about pound. I just covered it. Let me know if you want me to cover it again, or you want me to cover it in a different time frame, maybe. Even though we still need to see Mr. Bali speaking. Let me see my newsfeed to check whether he's already. No, it's another 7 minutes to go. Uh, yeah, it's another 7 minutes actually. But I will keep an eye on the headlines. So let's cover something else, and let's return to pound during Mr. Ballet's conference. So let me switch on the Bloomberg as well, so I could keep an eye on it. And my TV doesn't respond. Never mind. Okay, that's perfect. Yeah, so let's cover something else, guys, until Mr. Ballet is on its foot. So we're gonna have a clear technical fundamental picture for pound. So yeah, let's do that. Uh, so okay, let me check your questions. Dollar yen is the next famous cross that you want me to cover. Perfect. Okay. Uh, Here we are. Teddy asked firstly for dollar yen, our loveliest safe haven currency. So here it is next to pound actually. So okay, this is the daily chart. as you can see, it sustains this downwards channel, bouncing between the upper and lower line of this daily regression downwards channel. So feel free to add a regression channel or a general any channel that you want on your daily um, charts, because this will give you, as you can see, immediate actually daily resistance and daily support, because we have seen a rebound from the lower levels and a reversal, a pullback from the upper levels. So these lines, so this upper and lower line of the channel, provide some nice support and resistance level for the asset, with the expectations once they touch that levels to rebound or get a pullback, right? But overall, is keep moving lower um, um, in the medium term. So it's market is negative, RSI is below 50. So we have a daily negative outlook. As you can see, other than the downwards channel, also Bollinger's is pointing lower, is expanding southwards, while the asset, let me check where is the 50-day and 200. So 50, let's see together, and 200. So it's below is 50 and 20-day moving average. Actually, I need to put the simple ones because 20 is a simple one. Okay. So we have over here, as you can see, I think you can see, this is the green is the 20-day simple moving average, and the blue is the 50-day moving average. So we have a bearish cross of these two daily moving averages, actually not confirming, but supporting further the negative outlook for dollar yen for the next few days or even weeks. Okay, so any reversal and any retest of this upper line of the channel could quickly get a pullback lower. So it's bouncing between these two levels, as we already said. But let's go to the 1 hour chart. I think this is what you're interested in. So a strong bounce higher yesterday. Actually, it's a good. Um, yeah, it's an excuse. Let me clarify why this happened, um, just make sure that everyone is aware why we have seen this huge bounce yesterday. So what happened yesterday, guys, if you are not aware of it, is actually this bounce from that is actually more than, it's nearly 100 pips bounce since yesterday's bottom and today's top. That came after some hawkish comments from Clarita, Fed's member Clarita. So this by this hawkish from Fed's Clarita, um, actually boosted dollar and weighted on yen. So that's why we've seen this massive bounce that actually is not only on dollar yen, but it's all over. It was all over the place. We have seen that there was a big lift of U.S. Treasury yields as well, of dollar and any dollar currencies, since dollar got stronger on Fed's Clarita hawkish comments. Um, so yeah, but and let's not forget, guys, that dollar yen, actually this precise this cross, more precise, is yield sensitive more than other crosses. Okay, is yield sensitive. So this difference between the Japanese yields and the US yields is what is what is explaining the changes of dollar yen, um, given that the Bank of Japan announced that it's gonna keep the 10-year yield um, near zero. So actually US yields benefiting because the Japanese yields are clearly zero. So there is so in the long term, dollar is expected to continue benefiting against yen. Okay, that was in the long term. But let's focus on the dollar yen and the 1 hour chart. We had a big bounce, failing, however, to break, to move above the 109.75. This is also the 20 period moving average in this 1 hour chart. A pullback away from it. It didn't manage to sustain this rally. Doji candles 1, 2, 3, 4, 5, 6 doji candles in a row because there was a lack of bullish buyers. There is a lack of buyers to push the asset higher, and hence we have seen a pullback since European Open. So it's not it, there is nothing really happened that uh, impacted on this pullback other than the fact that we are ahead of claims today, but more or less of NFP, non-farm payrolls, tomorrow. So there is a bit of a pressure on dollar on the as anticipation of the NFP tomorrow. This is pretty much it from technical side. From a technical perspective, if we have a pullback below, let me put the actually, yeah, here we are. We have a pullback, a bearish cross 2 hours ago of 5 and 9 exponential moving average with fast moving average keep pointing higher. So the outlook is still looking southwards. Okay. Stochastics, and you cannot see my stochastics. Stochastics, they cross below the 20, but they don't really provide any sign of a rebound yet. They keep pointing lower, even though there's not a lot of space further to the downside. But yeah, it's still negative. So a bit of a consolidation might follow, but the fact that fast moving averages are keep pointing lower, Bollingers are expanding. I just okay are turning lower. RSI below 40, below 50. Any everything it actually implies to either some consolidation ahead of the US data, but more or less a turn a turn downwards. So the US data are in 27 minutes. So Bali is on right now. We keep an eye on the screen. So yeah, some sort of consolidation, but that is ahead of the data. Overall, dollar yen is in a sell-off so far today. As you can see, it turning lower for 1 to 3 consecutive 4 hour sessions. Next support, if it managed to break the, let me put my, okay. If it managed to break that 109.40 support level, the 9-day moving average, then the next support for the day, for the time being, it will be another 20 pips lower. Let me put the 1 hour chart because 4 hour chart doesn't really help you. While while as you can see, overall outlook remains down, remains below the 20-day moving average. A bit of correction yesterday, but yeah, remains in a downward trajectory. So as I said, negative outlook overall, negative outlook in the 4-hour chart, a bit of a consolidation in the 1-hour chart with next support at 109.30, but a break of that level could open the doors down to yesterday's high territory. ATR is suggesting a not 89 reading. So let me measure a bit this bit. So it moved just 4 pips. So we have plenty according to ATR. So yeah, guys, mine was better if we have start the analysis like now or at least in 30 minutes, because we will had Bali out of the way, Bank of England out of the way, US data out of the way. But yeah, I am explaining you what will be the impact, um, and you can move on accordingly. So down 109, actually more precisely 109.40. If I put the 109.40, the next immediate support, if it breaks, the next level to be watched will be the 109.30, just 10 pips lower. But okay, something that they will help us with dollar yen will be my favorite Fibonacci levels. So 109.23, 109.10, and eventually yesterday's bottom could be our next support levels on a continuation of this pullback from dollar yen. For the time being, as I said, some consolidation ahead of the data. So, okay, you can still, if you want to trade something like that, you can still do that. Any sideways, there are ways of trading side consolidating, actually ranking markets, okay? But you need to add some near term support and resistance areas. So as we already discussed, 109.40, this double fractal, or even if you prefer the 38.2 percent Fibonacci level are our next support territory, while on the upside, by applying another Fibonacci over here, you can find the next immediate resistance level. So if the asset turned higher, so if this pullback stops and eventually get back above the 109.50, then this could actually more precisely, a nice level to be seen, it will be the 50%, because it will completely turn the attention higher. So 109.56, 50% retracement level from today's pullback could turn the intraday outlook from negative to positive, and could turn the attention to 109.70 or even higher. Okay, so that was for the intraday picture. These are the key immediate support and resistance levels. While in the daily, I have already discussed about it. Apply a nice downwards channel, and you will be aware of any immediate resistance support levels as the asset keeps moving to the downside for more than a month so far. I cannot advise you what to do, my dear Shahardi. Hopefully, you got your reply based on my analysis on dollar yen. But as I keep saying, we have claims in less than 20 minutes. So these are data that add volatility to the market. So take care. Until the take care prior the data. The market is in could get volatile more than what how it was during Bank of England um, uh, Bank of England announcement. I'm glad that you had a very nice uh, performance yesterday. I cannot share what you did, but I'm glad that that suggests that you're doing you're doing good. Bravo. Sorry, I didn't notice your comment, Roshan. There is actually a live link. There is a live link in the Bank of England website. If you're interested. There is a live YouTube live right now, and you can find it in the Bank of England um, YouTube channel or Bank of England website. Um, so um, let's see some remarks from Mr. Ballet. Uh, Nothing really new, actually, so nothing really important so far. Actually, nothing really different from the statement so far from Mr. Bali. So let's keep moving. Please, what's the state of euro dollar? Let's see euro dollar. Guys, by the way, just to summarize a bit the day, so far, even though we have seen dollar gaining yesterday, okay, however, because we have seen that was yesterday's move. This is euro dollar 1 hour chart. Even though we have seen yesterday dollar gaining, however, today is the vice versa. Today is the loser of the day, so far at least, and Australian dollar is the biggest gainer so far. Okay, so we have euro dollar over here. It found a nice floor. Since yesterday above 118.28, bounce higher with Bollinger's keep pointing higher. Okay, fast moving average have flattened a bit, so we might see a bit of a consolidation, but the Bollingers are like expanding south northwards. Sorry, let's see. Okay, retesting the 38.2 Fibonacci level is above its 20 day moving 20 period moving average. This is in 1 hour chart. So intraday, we have a bit of a consolidation, I'm afraid. Despite this bounce, it still didn't confirm a closure above the 38.2 Fibonacci level based on yesterday's down leg. So we need to see a closure of the hourly candles, sorry, above that level, above the 1855, because only a closure above it could imply to a potential retest of 11870, 11860, or even a retest of the 190 again. So yeah, we need to confirm a reverse, actually a return back to the 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 week's range. So as you can see, since 29th of July, euro dollar entered a range, which was broken yesterday. Today is trying to get back to that range. But as long as we don't see a closure of the hourly candle above 118.55, then the outlook intraday remains negative, even though we have seen an increase, actually detection of the selling pressure. MACD is going towards the neutral line, something that suggests that sellers or the selling pressure has been significantly detected. That is size at 50, so it's neutral. Stochastic bullish cross, but still below 80. So yeah, let me check the 30 minutes chart. Up, up, up. Doji ready to form a potential evening formation. So we have another 50, another 10 minutes to for that candle to close. And if this is negative, and more precisely, if it closes below 118 49, then this is an evening formation and we could see a pullback lower and a retest of the floor that we have seen at 118.28. So keep an eye on how this will close in 14 minutes. 14 minutes. This is a 30 minutes chart. So if the asset forms an evening star more formation, sorry, that's a bearish signal. So it could suggest the test of the of today's floor at 118.28. So intraday, as we discussed, remains neutral. We need to see more. Daily, however, let me clear a bit this mess. So if I clear this, close. Okay, perfect. So as you can see, I earlier, just now actually, I taught you that this is the floor that we have seen for 2 days in a row. So a pullback could see the asset retesting that level. That level is significant because it's actually the 20-day moving average. So the asset managed since last week, actually the last 2 weeks, to rebound from the year's bottom and to get back above the 20-day moving average, something that it didn't manage to do for nearly 2 months now. So it crossed above 20-day moving average, and it sustained and move above it so far. So a break of that level, a break of 118.28, the 20-day moving average, it could turn the outlook back to negative again. So if this happens, then attention will be shifted over here, 117.60 territory, 2000, actually June's, July's bottom. Okay, and actually it's not only June, July's bottom, but actually is the bottom that we keep seeing retested and retested again and again since November 2020. So the asset, the euro dollar retested this level 1, 2, 3 for 3 times, and on the upside also retested the top close to 123 level. So are we gonna keep ranging in the long term? So that will could prompt a potential rebound and retest of the top, or we could see eventually breaking this support area and actually entering a bit of a free fall in the long term. This is in the long term, guys. This is a daily uh, outlook, okay? Because in the daily outlook, it's just bouncing between 118 and 123, 17. But yeah, this is a support area of a significant significance of a key importance, okay? Yeah, so um, in the medium term, as I said, it rebounded. So it's positive unless if we see this week a crossing below 20-day moving average. Intraday is in a pullback again with this 2 hours rally running out of steam. So let's wait and see whether it will resume the 118.28 low. Bravo, Shahardi, you're doing great. Keep practicing and keep your risk management on, because it seems that it is bringing you some nice results. Gold. Okay, here is someone asked about Iduro. Jonathan asked about gold. Let's see gold. Let me double check. The data will be out soon. Let me check what's going on with Mr. Valley. Nothing, nothing really exciting so far from Mr. Valley. So gold. It's good that you mentioned gold because. Okay, let me clear this mess first of all. Excellent. So after actually gold, it lacks of excitement to be honest, because it's despite this up and down, this sharp rally, this sharp pullback on what Sanders hawkish comments when the Sanders hawkish comments came out yesterday. uh, Gold didn't manage actually to exit the consolidation mode so far. So it's keep moving sideways between 118, 1808 and 1814. So still ranging, still consolidating, still moving sideways. And as I can see from the 1 hour chart, even the Bollinger Band areas have been flattened. So I'm afraid there is nothing that is nothing exciting, my dear Jonathan, at least in the 1 hour chart, other than the fact that this the latest candle is, it looks to be a strong one, pushing lower, potentially to a break of 1808 level. Let's see the 30 minutes chart, since we've seen this decline. Up, doji, and failure to move further to the downside. Small body candles, but the big one, the latest is quite a big one. So a breakout. Okay, let's see that. Let's put some Fibonacci expansions. Okay, perfect. So a break, a touch of 1808, sorry, and a breakout of it. This is a 30 minutes chart, so clearly intraday, a break of that, a touch of it, a break of it could open the doors for the next few minutes or even hours to 108.04 and even 108.10. 1802. Sorry. So these are for those that are for the people that are intraday traders trading 15 minutes chart, 30 minutes chart, or even an hour. Using my Fibonacci expansion, you can see my our next support levels based on the Fibonacci expansion tool. Okay, in case that the immediate support, the immediate floor at 1808 level breaks. Okay, there is a lot of selling actually right now. Wait and see. This is the 15 minutes chart. Up, down, up, retesting 1814 once again, down again, ready to touch the 1808. If that breaks, keep an eye on the next two support levels. So, a pullback intraday in the short term, but consolidation is being sustained in the daily time frame. You can see this is the daily chart. So in the daily chart, neutral outlook remains, sideways movements remains. Key resistance at this 1833 level, and key support is actually at the other than the 20-day moving average to the next double down fractal 1792. But yeah, the daily outlook, the medium term outlook for gold is like turning negative, turning neutral, so moving sideways since the end of June, and it could likely continue unless if we see a break of 1833 and 1792. So neutral outlook in the medium term. Intraday, we have a pullback. Let's keep an eye on a potential break of today's floor. Um, okay, New Zealand dollar, and yeah, New Zealand dollar. Is this anything new? No, I think, unless my newsfeed stuck. New Zealand dollar. Okay, Mr. Bale, reduction in balance sheet is not a substitute for higher rates. So it's pretty much it's been a little bit of a clarification on the statement. Remember, on the statement we have seen that they said that they will firstly hike rates and then consider of a deduction in the quantitative easing. So Mr. Bale is now clarifying a bit this statement by saying that um, uh, higher interest rates, actually a deduction of the balance sheet is not a substitute for the higher interest rates. Um, so he's still searching for further confirmation in regards to the growing inflation and growing economy. So as he stated, the only evidence that they had in regards to the fact that the inflation is growing, um, it was from the labor vacancies, especially in June. That's why pound might be steady right now. Let's see how it reacted. Yeah, steady. So guys, wait a bit because there is a lot of consolidation. There is no clear direction. Um, for cable right now, intraday at least. Okay, you can see that it's still sideways. So we need to wait for Mr. Bali to finish or even the US data to come out. Uh, so you mentioned New Zealand dollar. Let's get back to New Zealand dollar. Let's start with the daily chart. A nice rebound since last week. It managed to turn higher and to break July's top. Is it it July's top? No, actually, it's not July's top. My mistake. The latest up fractal at 0.7044. Keep extending higher, retesting actually for 2 days in a row. July's high and the one and 0.71 level, actually retesting the round 0.71 level. As you can see, there was a big tail yesterday higher, while today it keeps pointing upwards, it keeps pointing northwards. And as we can see, RSIs keep pointing upwards as well. MACD presenting a significant detection of bears. RS stochastic also points higher. Not yet, hasn't yet broke the entered the overbought territory, so there is still further steam to the upside. The asset is above 200-day moving average. Let's see 50 as well. And actually crossed today the 50-day moving average as well. So this is it simple? Simple. Okay. So key resistance level would be the round 171 level, which looks to coincide with the 200-day moving average. So that would be a key level to be watched, guys, because okay, it's retesting it for a second day in a row, but a break of that level could open the doors over here more than 200 pips higher, because if I'm not mistaken, the break of this level is also more than 50% reversal. Let's check. Oh yeah, so a nice strong level to be seen, guys. Write that down. 0.771, I will zoom in. 0.71 is the confluence of 200-day moving average, of 50% retracement level from the down leg that we have seen in the second quarter of 2021, and also it's a round number, and two doubled up fractal. So it's a very strong resistance level. So what that means, it means that if it breaks, if we have a daily candle closing above it, and the next day another candle suggesting further boost higher, then the outlook turns from neutral to positive. So attention will turn higher to 0.73 highs. While on the flip side, if we say that we have a strong resistance level, then that means that we might see a pullback. So if it fails to break it, if we don't see a strong candle, bullish candle above 0.71, but instead we see consolidation below it and potentially a pullback like this one or like this one, etc., then eyes turn lower back to 0.69 level. Okay, a pullback could suggest a pullback down to 79. So keep an eye in the next few days on Kiwi. It looks a bit interesting, especially as we see the momentum improving into the positive side. So we have covered, we have covered Kiwi, but daily only. Let's check 1 hour chart. Consolidation, bounce, and consolidation remains. I'm not sure what you want me to tell you at this point, because there's a lot of consolidation, but okay, let's see what's going on. Or let's flip to the 30 minutes chart, because the asset it has entered once again for the 1, 2, 3, 4, 5 hours in a row a sideways move. So okay, yeah, consolidation it is. However, MACD is still positive. RSI above 50, but not significantly so. Remains sideways. The deal there, Shahardi, just for the joke. Uh, so yeah, intraday picture remains sideways so far for New Zealand dollar. What it triggered my attention is its daily picture, its daily outlook. But intraday, sideways. Okay, immediate resistance is at the top that we have seen earlier, and immediate support is at this one, two, three, four, five um, um, down fractals at 0.7036. But yeah, nothing really. Let me think, apply. A 4 minute channel, by the way, in the 1 hour chart since 30th of July. So a pullback below the closure in the hourly candle below the 0.7050 or even 7053 could retest the low territory of this channel at 0.7016. But yeah, for the time being, it's moving sideways. It's difficult to analyze something like that as long as we don't see hitting somewhere. Thank you as well, dear Shahardi. So, okay, guys, the data are out. So let's see dollar and how it reacted. Pound is still sideways. Where's my dollar? Yeah, dollar. Sorry, dollar cross. Dollar, dollar, dollar. Dollar. Here it is. Here we have dollar. 30 minutes chart. Let's have the 15 minutes chart more precisely. So before the data, it appreciated slightly, just 10 pips, but after the data, it felt lower. It's actually turning slightly lower. We cannot really, it's not a um, substantial move yet. But what I can see, guys, is that the data disappointed significantly. So, okay, the initial jobless claims was in line with expectations, 385,000. Uh, so just 1,000 jobs lower, higher, sorry, on what was expected. So no impact. This shouldn't have any impact. Um, Actually, I'm gonna show you that because did I type something or I could put it as a caption actually so everyone can see it. So yeah, small missed, okay, small missed, just 1,000 claims above forecast. So it shouldn't have it shouldn't have a significant impact on the dollar and on the market in general. But what missed significantly expectations? Okay, we had actually a bit of a disappointment on the trade balance. So trade balance, let me show you that as well. So So trade balance, U.S. trade balance for goods and services fell. Actually, um, it shows a surplus, a bigger surplus than what was expected. So it was expected to come out at 74, so drop, so a surplus 74 billions, but it came at nearly 76 billion, 75.7 more precisely, surplus. Sorry, what am I? Um, not the surplus, deficit, sorry, deficit. So a bit of a disappointment, because this, what that presents is that um, um, the exports were actually less than imports. So as I can see over here, exports increased 1.7 billion, but imports increased by 1.9 billions. 3-month average. This is it. So the service surplus saw a decrease, but the goods deficit rose. This is a breakout. There were more imports than exports in May. So that clarifies this deficit that we have seen at 75.7 billion dollars. So, so not a lot of volatility on the announcement, because they came very, very close to expectations. So I thought that would be a lot of volatility, but because they came very close to expectation, we cannot really see that. As you can see, dollar index stuck at 92.20 territory. So it's been in this area, in this 92.10, 92.35 for like since yesterday. Let's see the 1 hour chart and the daily chart. Okay, we have a lot of anticipation of the NFP tomorrow, so this is where the majority of the traders are turning their attention on. But yeah, we had definitely a bounce in the last hour from 92.10 to 92.20, but it remains below 20 period moving average. There is no bullish cross either of our 5 and 9 hour exponential moving average. So there is not a confirmation or it's a suggestion that the dollar from downwards is pointing to the upwards. We need to see a bullish cross from 5 and 9 and a breakout of the closure actually above the 20 period moving average in this 1 hour chart in the next 15 minutes, in which it will be this candle would be completed. Yeah, in the daily time frame, still below 20-day moving average, close to the low territory of the last 2 months. So yeah, as long as we don't see a breakout, actually an extension higher, a breakout of the 20-day moving average, we cannot really turn the attention to 93 level. So a choppiness is what is the theme for dollar right now. Um, yeah, solicitation ahead of the non-farm payrolls. So guys, this is it from me. Um, I will get back to pound and finish with it because it's the spotlight of the day. So Mr. Bali has finished. We have the US data out. So pretty much we have everything out. We don't have any significant data ahead of us to be released. So the key events of the day have already been announced. And what we have seen on the aftermath of Mr. Bailey and Bank of England monetary policy meeting is that there is some pressure on pound. Some pressure on pound is being sustained. Of course, a bit of a patience is needed over here just to see this candle closing in 15 minutes. But we had a top over here which it wasn't retested again. The next high was lower. The current candle retest the bottom that I told you, and actually is ready to form uh, a pullback. So there is some selling pressure for pound intraday, especially if we see this candle closing below my 50 period moving average. My fast moving averages are starting pointing lower, not bearishly crossed yet, but starting sloping lower. Stochastic already had a bearish cross and keep pointing sharply lower. So there is the intraday outlook for cable turn into a negative one. Um, it said this might be on the Mr. Bali's comments in regards to um, in regards to the transitory inflation, the fact that there is no enough evidence of growth, but only from labor vacancies. But it might be also the choppiness of dollar as well. So gaining ahead against pound. Um, yeah, it's turning lower. So dollar benefits, even though the data weren't actually were of a minor importance. Um, so yeah, let's see how this candle will close. But if it's such a big body candle closing below the 50 period moving average, then we might see a shift lower intraday for cable. But don't forget that in the daily time frame, the asset remains at 2 months highs. So keep on your trading journal an eye on this top over here, double top, um, and on a potential breakout of this top. Guys, a final call for questions. If you don't have any further questions, I need to call it a date. Um, Print the caption on. And this is pretty much it. I cannot see any further questions. Let me. Okay, in Facebook there's a lot of spamming, but no one is asking about anything. Only Emmanuel asked about gold and Sidesh asked about gold, but we have covered gold already. We have covered dollar index as Mustafa requested. So we are pretty much done. Um, yeah, thank you very much for joining me today in this live analysis. Hopefully, my analysis helps you at least ahead of the NFP tomorrow. Take care, risk management first of all. Uh, um, and yeah, I'll see you again tomorrow. Tomorrow, still gonna have it's gonna have a live analysis, a live coverage um, on YouTube and Facebook like today. So you can join him, and he will actually help you with anything you need, and he will help you to understand the impact of the NFP, and where the market is setting ahead of the end of the week. So yeah, that's pretty much it from us. Thank you for oops. Thank you for joining us. Hope you're having a great day ahead. And hopefully I'll see you soon, guys. Thank you very much for attending. Have a great ahead, and I'll see you again tomorrow. Bye bye.